Hey everyone, Davis here with the Taxes Save team. Thanks for joining us this week. This is be an exciting case study as we start out here in 2026. Couldn't be more excited about, again, what we accomplished in 25. But today, we're going to have a great case. It's really a two for one, but more impactful than a client we're already helped implement two strategies, right? Is the impact it's going to have for this business owner. There are lawyers actually out of the DC area. It's going to really have an impact on how much more they get to keep of cash flow, and how we help them with that cash flow throughout the year because they're not having to pay those super high quarterlies because of proper planning. So without further ado, as we always do, I'll be excited to pull up the calculator here and walk you through these examples. And again, everyone's scenario is different, but this is a great ROI of just tax savings alone we were able to achieve for this successful law firm out of the DC area. So with that said, we'll dive right in. Share my screen as we do. And here we go. So with everyone seeing the screen here, right? This client had 1.7 of income, $1.7 million of income. They're, like I said, high income earning attorneys. And so you can see here the tax without any strategy there between state and federal is going to be $723,000 and change for these clients. Well, what did we do, right? Well, we had some great strategies we were able to accomplish. In fact, they did two strategies, these being business owner lawyers. One they liked is one strategy that allows, again, to create a new business, variety of business in the equipment leasing industry. We're able to capitalize on leverage financing and put as little as 10% down. And this client, they wanted to buy $400,000 of equipment. So they were able to put with 90% loan to value, 10% down being 40 grand. That was their capital outlay to get $400,000 of equipment. Now, that equipment business is not at all just to save tax. It's also the great ROI of cash flow and revenue of this active business this client has brought into play. That was strategy number one, folks. 40 grand for a $400,000 deduction done through some great financing in that program. The next one they did was again, they took advantage of the 7 times software business deduction. So again, a very simplistic type of active trader conduct business we brought into play. In this case, who's not using software these days? And this is what the client implemented, right? So they, as you see here, put 50,000 into this business through seller financing, was able to get a 7 times deduction. Again, that money they did put out is going to cash flow, have some great profit and revenue from that software business. But with that, right, that deduction, that software purchase, the deduction they're taking under Section 168K, bonus depreciation, which is still here in 2026, folks, at 100%, got them a $350,000 deduction. So right now, to recap it for everyone listening today, outlay between two strategies for this client you see is 40 grand plus 50 grand, 90 grand to get, as you see here now after this proper planning, to get $750,000 of deduction. So their income of 1.7 million, right, was going to have that $723,000 tax bill. After the $750,000 deduction they implemented for $90,000, their taxable income is now 365 grand. So the big benefit here is right here on the right. The total savings for 90 grand this year was $358,000. Well, folks, the excitement doesn't really stop there, though. That's a huge ROI. That's, as you see here, literally a 398% return on tax savings alone, not counting any cash flow. That sounds amazing, but what's even more amazing is, again, these are business owners that are lawyers, right? So as business owners, they're paying quarterlies. Think about it. Their quarterlies, as you can see here, right? 723 divided by 4, right? They were going to have to write a check coming up here soon of literally about $180,000 just to pay their estimated quarterlies. Well, think about this. Why would we pay into Uncle Sam 180,000 if we're going to have to really only owe 365 divided by 4, about $80,000, $90,000, right? So really, we just doubled basically what, cut their quarterlies in half. Imagine having 91 grand in your pocket that you didn't have to send to Uncle Sam. Think about how that could help, whether you invest that in retirements, right? Compounding interest, right? Retirement accounts, whether you invest in a brokerage account, you invest it, as most business owners do, right? Back into the business to create more cash flow, bring more employees on and scale, right? These are the things that the timing is now, folks. By starting sooner and having a plan in place, especially early in the year, we get to impact and have this money compound of what's going to be saved and kept in your ROI earlier than later, then rather than have to wait for a refund and wait until the last minute to do these things, right? Some clients do, and that's fine, but some clients to get this $358,000 of savings is now going to have to wait till late after April, or if they're on extension, late into next year at best of 27 to get back what they could have had today in their pockets of savings. So it all starts with a plan, right? This client, has worked with us now a few years. And so they trusted that proactive nature we take on because now they've experienced the benefit of what that provides. So that's what we do here at Taxes Save. We provide custom plans and implementation for our clients of bringing these things to light, and not just planning, but really making sure these implemented, compliantly followed, and filed correctly. So everything goes from A to Z as planned. So we look forward to seeing you in your own taxes saved meeting. As you can see, the time is now. The sooner the better. What we can really do to provide to your bottom line of how we can help you save tax, how we help you keep more, live more, and leave more in what you have, folks. We'll look forward to seeing you soon. Thank you.